Earlier this morning, we heard from Home Depot, the world's largest home improvement chain, reporting second quarter earnings that beat analyst estimates. And joining us now to break down these numbers is Laura Champine. She's an analyst at Cowen Co. She has a neutral rating on the stock. Laura, you've had a few minutes to dig through the Home Depot press release. What did you see that struck you as surprising and perhaps positive for Home Depot versus Lowe's, which had a terrible quarter yesterday?
Right, particularly compared to Lowe's. For Home Depot to comp only down a little less than 7% in the U.S. is great news. Both companies claim to have gained share, but Home Depot's comp is better. And if you look at Home Depot's transaction count, it's actually up a little bit year on year. So the issue is fewer big projects and not fewer customers.
You're talking, of course, about same-store sales in the United States down 6.9% yesterday. Just to remind everybody, Lowe's was down 9.5%. So put it in perspective for us. Home Depot for a long time was trailing Lowe's. Are they really beginning to turn it around here? Obviously in a very, very difficult environment.
Home Depot's been lucky enough to have some pretty easy fixables. In some cases, it's as simple as putting the paintbrushes by the paint for Home Depot, cleaning up the assortment so that they're selling good, better, best shovels rather than just 20. So I think that the company's had an easier shot at improving its results, and it looks like their customers are actually voting with their feet and spending more at Home Depot relative to Lowe's, or at least spending more time in Home Depot relative to Lowe's, which should help them coming out of the downturn.
I know one of the things that you were looking for heading into this report was the sort of repair and maintenance category, because there has been this anticipation that during the economic downturn, people were going to focus on their own homes. The big question, of course, was how much money they would be spending. Did you divine anything from what they had to say today?
Well, the size of the ticket is down a little more than 9%, which does tell us that we're seeing fewer big-ticket purchases. We'll hear more on their conference call at 9 o'clock today, but good news that they're able to raise earnings guidance and beat on gross margins, even selling smaller ticket items, which are typically lower margin products.
Laura, I want to move away from this idea of smaller ticket items. I mean, for a while, Home Depot had gotten into more the construction, sort of the industrial business. It didn't work out so well for them. Was that a lesson learned, or did they go back to that well once maybe the housing market has stabilized and construction picks up again?
You know, I think that their push there was a few years ago when they were really still trying to be a growth company. One of the good things, one of the things we like about Home Depot is that they accept where they are in the cycle. So Lowe's just, for example, took a big charge yesterday, reducing the number of new stores for next year. Home Depot's already taken down their growth expectations, so they're acting like the value company that they are right now.
And we know at 8:30 we're going to get sort of the first statistics for the month of July, the housing starts data. I mean, how important is this as far as trading sentiment goes to Lowe's and to Home Depot?
Right. It's huge in terms of sentiment, but the numbers that we're really looking at and think people should focus on are home prices, because I think that until the consumer can view their home as a good investment, they'll spend less at the home improvement retailers.
Laura, we're seeing Home Depot shares trade up to $27.05 this morning. Closed at $26.11 yesterday after a big decline on the heels of that Lowe's report. Do you think investors are going to be progressively more encouraged by what they see out of this, or less so? We've got only about 20 seconds left.
Sure. There's really no top-line improvement. The sales guidance is still down 9% for the year. It was 9% for the quarter. Valuation looks a little stretched at about 17 times, but this is certainly better than what people expected. It's just good news they're not missing.
All right, Laura, thank you so very much. Laura Champine, analyst covering Home Depot. She's at Cowen Co., joining us here on the set this morning.